and let's start with the taxes on income. And here, as we highlighted at the beginning of our video, it should depend on the nationality of the business owner either to pay Zakat or normal income tax. Let's understand Zakat and what does it mean. Zakat is based on Islamic concepts, and Zakat is a form of almsgiving or charity, being a mandatory act of giving a portion of Muslims' wealth with specific threshold to those who are in need. Zakat is typically calculated as 2.5% of a Muslim's accumulated wealth, including savings, investments, and certain assets, if they meet or exceed a specific threshold. Saudi investors and those from GCC countries who are considered to be Saudi citizens for Saudi tax purposes are liable for Zakat. Well, that was briefly for Zakat, and now let's move to the income tax. So, corporate income tax rate in the KSA is 20%, and generally non-Saudi and non-GCC investors or permanent establishments are liable for the 20% corporate income tax on their net adjusted profits. Only for some specific energy production activities and businesses, the corporate tax rate would be between 30 to 85%, and such would include the income earned against oil and hydrocarbon production in Saudi Arabia and also the natural gas businesses. If both Saudi and non-Saudi investors own the company, they will pay both income tax on the portion of income attributed to non-Saudi sources and Zakat on the rest. Good. That was for the income tax, and relatively we would quickly highlight that in the KSA withholding tax regulations went effective